Hey, how's it going, guys? Benny Childs, founder of the Teach Me to Fish FX trading community, and I'm back with another trade recap video. Going to show you guys how I captured 281 points off of the Dow Jones or the US30 versus the USD Forex indice pair. All right. So to be honest with you guys, I was expecting for today's candle to finish bullish. Reason being is because we had just let me blow this up, but we had just created the swing low here on the daily. All right, so we come here. All right, so we had just created that swing low on the daily on Friday. All right, yesterday, Monday, September 5th, 2022, was the Memorial holiday here in the U.S. All right. So I did trade. Believe it or not, I did trade, and I had a losing trade um, yesterday. I was actually in profit, and I just kind of let it run, just kind of playing around. But anyway, I was expecting for the market to go up today, right? So when I dropped down at the 15 before 8:30. Um, had a high here and a low here, right? And so I marked my most recent swing low, right? And excuse the crickets. I am outside. I'm always outside, right? And I marked my most recent swing high. All right. So again, I was expecting the market to go up. And so I dropped down to the 1 minute. Let's get back over here. Do do do. That's the afternoon and lunch session. I want to come here into the morning. Let's get to our blue vertical line. All right, so this is the 8:30 line. This is that 15-minute swing low. I was looking for the market to come down, all right, give me a market structure break, and I wanted to enter in off of a fair value gap. All right. I got frustrated today because it just seemed like I did not get the setup whatsoever. It took forever for it to get the setup. But anyway, you saw the market, it dropped, but it never gave us a break of structure. So I'm still waiting here on the 1 minute chart as time is going through. So it dropped, right? It did not give us a market structure shift, all right? So I did not have a trade there. It dropped again. It really did not take out, it took out liquidity here, but I did not get a market structure shift here. So I had no trade set up. It dropped again, finessed this liquidity, right? Kind of bounced around, right? We didn't have a market structure shift yet, except for this one right here, but this is the one I actually saw. All right, so it dropped down. It's kind of hard to do these things. I wish I could go live like I normally like I used to, but I just can't. But anyway, it dropped, right, and I looked at this as a swing high, right. So this candle's high was above this candle's high and this candle's high. All right, so I was looking for this to be my market structure shift. All right, that was my market structure shift right here. All right, um, and I know this was a little risky, but I had a fair value gap right there. All right, so I was waiting for a candle to come into that fair value gap, which was that next 1 minute candle. I came over here, and instead of doing the 50 points, I only did 20 points, which is basically 2 pips. So we just add that to 50. All right. And then I hop back on the 15 minute. to find my TP target. Let's get back over here to Tuesday. All right, and basically what I was looking at the fair value gaps here that were open. So I went for the highest one. This one was pretty much already. This one was closed, so I aim for this one right here. All right, and the market popped in and gave me what I was looking for. So I don't know why I said 281. This is how I captured 296 points on the Dow today. Yeah, I mean that's pretty much it. I'm using ICT's 2022 mentorship trading model. Again, we just simply wait for 8:30, and we wait for a break of the most recent swing high, swing low, looking for the market to finesse. All right, and we drop down to the 1 minute. We wait for a market structure shift that leaves behind a fair value gap. What I like to do is take the closest fair value gap and I just put my stop loss below the low. Here, let me jump over to the 1 minute chart so you guys can see that. I put my stop loss typically 50 points, which is 5 pips, but I was looking at the spread on my broker, and the Dow Jones is only a three pip spread. So a 3-point spread. So what I did was I just added 2 points just to have a better risk to reward and to not to have so much loss, or not to have such a big of a stop loss. All right, so I always take that first one. We had another chance here. We had a market structure shift here that left behind a fair value gap that we could have got in right there as well. You could have got in here as well. We had a market structure shift that left a fair value gap that we could have got in on this candle right here as well. But a couple of the key things that helps me is, one, we can't just look at fractals, because fractals are not going to always show us a swing high or a swing low. For instance, this is a swing high, right? And I like the way ICT defines a swing high and a swing low. It's basically a three candle pattern. All right, 1, 2, and 3. You want that second candle. For a swing high, you want the second candle's high to be higher than the first candle's high and the third candle's high. Okay. For a swing low, it's still a 3 candle pattern. 1, 2, 3. You want the second candle's low to be lower than the first and third candle. All right. So if I was just waiting on a fractal, like, it did not show here. All right. You can see it just did not show here. So 1 candle, 2 candle, 3 candle. My second candle's high here. If I click on this, and if you look up at the top of the screen, you can see up here, you can look at the high. The high is 31,094 and 60 cents for that second candle. The first candle's high is 31,093 and 10 cents. And then the third candle's high is 31,048 and 10 cents. And so obviously 31,094 and 60 cents is higher than the other. So that's why I looked at that. And when I got that break and I saw this fair value gap, as soon as this tapped in, I entered in, put my stop loss like I showed you guys. And again, that's how I got 296 points out of the market. Because again, I was targeting this fair value gap. Let me get back over here. I just really want to show you guys what it is that I'm doing, so you too can be profitable. This has really changed the game for me. All right, I'm able to kind of like get in and get out. I'm not waiting on supply and demand zones. Nothing wrong with that, but I'm not necessarily having to wait on those zones to be hit. Um, and yeah, again, I targeted this open fair value gap. I believe what I did was, I think, yeah, when I got to here, I took partial, right? So I basically took about 75% off, right? And then I moved my stop loss 1 pip into profit, right? And I went ahead and set my TP here, all right? And so my TP got hit, and so that's how, again, I was able to get 296 points out of the Dow Jones, or the Dow Jones index, or the US30 indice. And yeah, it's pretty good. Again, 296 points. It equates to 29 pips. However, the movement on the indices are valued higher. I love trading it on an ECN broker. All right, I can start an account with $10, run it up. I don't have to take out a minimum $550 contract size, but I'm just using the example of $10. You can start with anything, 500, but you can start with a futures contract size of $550, right? And instead of being in one trade, you can take several trades if you manage properly. So, but anyway, yeah, it started to go against me. But again, I'm looking at the daily. The daily is going down. We had the swing high. We had a sweep of the liquidity here. So there's no telling. We do have this fair value gap up here that has not been tapped into yet. All right. So that one has not been tapped into yet, as well as this fair value gap. All right. So if the market does not come into this fair value gap for tomorrow, Wednesday, September 7th, I am going to be looking for, on the 15-minute chart, for a high to be swept. And I want to take it down to here, because I believe once the market comes into here, we may get a bullish run to go ahead and tap into this fair value gap, or we may just get like a sweep of like any of this liquidity before we just go up and fulfill the imbalance. But you guys know how I feel about the indices. I feel that we have tons of supply and demand zones that have not been tapped into. We have tons of imbalance that has not been tapped into. So I really believe that the stock market is going to go down further. All right. Here, let me draw this out. So we have this fair value gap here on the weekly that has not been tapped into. We have this demand zone right here that is unmitigated. All right. If you guys follow my weekly forecast, which you should, then you should know about my mitigated and unmitigated zones. All right. So that's unmitigated demand. And then we have imbalance down here, small imbalance. I don't think the market is going to come down this far, but it is very possible. And so we also have this unmitigated demand down here on the weekly. So, but I think that the market is going to come through, pop into this demand here, and then we'll be in a bull market. That's just what I think. I don't think they're going to bring it all the way down here to, what is that, 22,505.20. I don't think they're going to bring the market down that low. All right, because more and more people will be able to get in if it goes down that low. Let's see if we throw a fib on here. Let's just throw a regular fib on here. Yeah, I mean, this is pretty much at the 50% mark. We may get a tap down into the 61.8. But yeah, overall, I think that market is probably going to come here and then push up, and we'll be back in a bull market. That's just what I think. But anyway, to get back into ICT strategy, again, I think that for tomorrow, the setup I'm going to be looking for is a push to the downside to take it up. All right. But the thing about this thing, guys, is you can really just literally just sit on the 1 minute and like this setup here in the afternoon that I didn't take. I was busy working. But what do we have right here? We had a what I'm trying to pick. I'm trying to pick this. We had a liquidity finesse right here. I should. Where's that? LQF. We'll just go with liquidity grab. We had a liquidity grab there. We had a market structure shift. All right. We had a fair value gap left behind. All right. And so we would want to enter in if price comes back to here. I would have put my stop down here. Threw on the 2 or 50 pips. Probably would have been 2 pips because of, like I said, when I take a look at the spread. Okay. And even on the 1 minute, like we don't necessarily have to go to the 15 minute. We can start targeting fair value gap. So like I said, my main target would have been here because that's like closer. All right. And in the afternoon, I could have got 98 pips if I was, at my phone or computer or, whatever. And that's just on the 1 minute. Like his strategy, man. Some of the people give him so much crap, and a lot of people that I rock with, so that I support and admire and encourage. They give him so much crap, but his strategies work, guys. Like again, I didn't take this, but had I been at my computer just watching the 1 minute chart, I could have got an extra 98 pips. Like you guys see, like I'm in the market like every day with this strategy. So yeah, they give him so much crap again, but his strategies are proven. So yeah. But anyway, that's it, guys. That's how I caught 296 points here on the Dow Jones. And I hope this was an encouragement. And as always, guys, do me the honor and subscribe if you're not a subscriber. Like the video, dislike the video based on what you think of it, and comment below. Say hello. Do me the honor of becoming a subscriber, guys. Until next time, always remember, if you stay in God, you will stay in control. Happy pip fishing. Bye-bye.